We are talking about SBA funding, and we'll be sharing really how we did it, what our deal looks like, how we structured the deal, how all the numbers work. We're happy to share all the numbers. And really, I would consider us your virtual guide at showing you how you can do a bigger deal like that. This is really our goal and objective. We're not here to sell anything. We don't really sell anything at all. So we're just here to talk about how we are building these badass mansions and how we're able to get all the money for it. Laura and I used how much of our own money?
It was a goose egg.
$0. $0 of it. We're going to be $10 million in plus on this project. Use $0 of our own money to do it. And part of that, the majority of that money is coming from the bank, from SBA. I want to share some of our lessons tonight of how, if someone would have told me and said, hey, Brett, just do this and this and this. Here's what you need to get SBA funding. I would have done it on my first one. I had no one show me how to do it. So I think that's really the goal. We've messed up a lot of times. We've been very successful because we've messed up a lot of times, right? So let's show you the mistakes, how to get around them, how to do a big deal, right? That's really our objective for you, how to do one deal that will change your life. This here on the left, this is our assisted living on Mesa. We opened up in 2020. This was a home conversion. We added a huge addition on it, and I raised all that private money. We raised $1.1 million to do that, and because I didn't know what I'm going to talk to you about tonight, and I actually, when I say I mean we had to actually sell 2 rental properties in order to get the down payment funds that we needed to do this, because I raised money and then we ran out of money. I didn't have a guide for this, and I didn't know what all the construction, all the fire stuff was going to be like. So we went over budget by like $500,000, because honestly, I think that the limiting factor is usually the funding, right? If you had a framework for here's how you structure the deal, here's the bank that you talk to, here's how you get the loan for it. It's going to have a real estate side loan and an operations company loan with a bunch of reserves and working capital. If you can do that, if you have a framework for how to raise money from an investor, then you have like so much of the hard stuff done, right? Then it's like, well, this dream of mine isn't that difficult. It's not that far out of reach. So this is why I love SBA, because they will do 2 parts to the loan, right? They'll do a real estate side and they'll do the business side. And if you compare to the other types of loans that I've gotten, right? I've gotten commercial loans, and I actually refinance back out into a commercial loan. We'll talk about that later, because I probably will refinance my SBA loan into a local commercial lender loan. But they only will focus on the real estate side, the real property, right? Something that has collateral against it. So that's your land, right? That's the actual building. Those kind of things. That is where most banks will lend against, but not the SBA. They will actually lend on the right side of the screen here in addition to. And so they'll lend on the furniture and the decor. We have about $65,000 per mansion in budget for furniture and decor stuff. Working capital, I mean, you're going to go negative like a couple months there in the beginning, 1, 2, 3 months, right? There's that working capital. All of the pre-salaries, if you hire a manager before that, you want to do marketing, you want to have send out, letters or do events, or, even an open house, right? Can cost $5,000 or more, get a taco guy and a band. All of those funds can come from this side, the right side, from the SBA. I want to unpack both of these things here because it's really, really important for this one reason, that usually if you went to a local commercial lender and you said, hey, you know what, I'm doing this deal, and our deal is, say, $2 million, $2 million for the real estate. They'll say, okay, cool. Well, we'll lend you 80% of that. So 1.6 million. And then you say, okay, well, that's $400,000. I have to come up with $400,000. That's $400,000 for the right or the left side of this screen. Then there's everything on the right side of this, which you might think, oh, that can't be that much. When you're talking about interest during construction, interest for lease up, and the different gap funds and working capital that you need, man, it might go for an extra $400,000 on that side. So you might actually thinking, oh, I need $400,000. No, actually, you might need $800,000, right? $600,000 to $800,000. It can be the difference between I can do the deal and I can't do the deal. And so that's where I was. I was in this place where I'm like, that's just so much money, right? How do I come up with all this money because I have all of this interest? I'm building and I'm going through and I have to pay my taxes and I have to pay insurance on the money that I borrowed so far. And there can be a lot of additional interest and fees and all that kind of stuff. So this is what I want you to hear from this is if you're like, oh, SBA, I don't know, I'd rather just work with my local bank. Cool, your local bank's great, but they're most likely not going to lend you all the working capital stuff, which honestly can be so much money, hundreds of thousands of dollars. So let's talk about this here. The SBA, they will lend all of these things here. So the land, right? And practically speaking, I like to buy the land up front before I get the SBA loan. And you could buy it however you like. It could be, cash. It could be seller finance. Your investor could pay for it. You could get, some type of local bank to do 10 or 20% down, something to that effect. And if let's just say you put $50,000 down on a $500,000 piece of land, that 50 grand will roll dollar for dollar into the loan that you get, whether it's, 3 or 6 months later for SBA. So you're not losing that money as part of the down payment. It rolls directly dollar for dollar into it. So they'll lend on the land and then refinance it back out when you do it. They'll lend on the building, right? With construction draws, month by month by month. They'll send you money to the builder to do this. They're going to come and check the project, send somebody out to make sure it's actually being built to what the plan is and make sure it's going on budget. But you're not paying interest on the money you haven't borrowed yet, right? So there's that. They'll lend money on all the site stuff, right? The roads and the driveways and connecting to the city sewer line and all that kind of stuff. They'll lend the money on the architect and engineer. And most times you have to pay for that up front, right? So let's just say you spent, 30 grand or 50 grand on the architect and the engineer. Those fees, again, dollar for dollar, will push forward into the deal as part of that down payment. Same with the permit fees. They'll cover the bank fees. There's SBA fees, they're higher, right? And all of that kind of stuff. So even the equipment, right? All the things you have to buy, the appliances and all those kind of stuff, they will lend on all of that in addition to everything now on the right. So honestly, most of that stuff down there at the bottom of the left side, the local commercial lender's not going to lend on, and then they're not going to lend on anything on the right side there. So it can make a massive, massive difference, and it can be the difference between you being able to do a big deal or you just sitting on the sideline thinking, it's not for me. I can't raise that much money. Well, you can if they cut the money in half, right? If you only had to raise 400 grand instead of 800 grand, yeah, you could probably do it. So that's really, really why I like this. And nobody actually told me that on the front side of me getting into this space.